Good morning, ladies and gentlemen. Welcome to the Q3 and 9M FY22 conference call of Hindustan Oil Exploration Company Limited. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal the operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Anuj Sonpal from Valorum Advisors. Thank you, and over to you, sir.
Thank you. Good morning, everyone, and a very warm welcome to you all. My name is Anuj Sonpal from Valorum Advisors. We represent the investor relations of HOEC Limited. On behalf of the company, I would like to thank you all for participating in the company's earnings conference call for the third quarter of financial year 2022. Before we begin, let me mention a short cautionary statement. Some of the statements made in today's earnings call may be forward-looking in nature. Such forward-looking statements are subject to risks and uncertainties which could cause actual results to differ from those anticipated. Such statements are based on management's beliefs as well as assumptions made by and information currently available to management. Audiences are cautioned not to place any undue reliance on these forward-looking statements in making any investment decisions. The purpose of today's earnings call is purely to educate and bring awareness about the company's fundamental business and financial quarter under review. Let me now introduce you to the management participating with us in today's earnings call and hand it over to them for opening remarks. We firstly have with us Mr. P. Elango, Managing Director, and Mr. R. Jeevanandam, Executive Director and Chief Financial Officer. Without much delay, I request Mr. Elango to give his opening remarks. Thank you, and over to you, sir.
Thank you, Anuj. Good morning, everyone. Happy to connect with you all in this Q3 FY22 earnings call. Jiva, our CFO and full-time director, is with me. Valorum Advisors, our investor relations advisor, are also on the call. I hope you all have received our updated earnings presentation. We've also uploaded that on our website for your reference. Let me start with update on B80. Pre-commissioning team is on board at KGB offshore installation now. We need to replace few equipment that will be delivered over the next couple of weeks. Service engineers from original equipment manufacturer will also be joining later this week. Overall, we target to complete all commissioning and testing activities to commence production by end of March 2022. Commissioning sequence require us to commence the D1 oil well first on production, and D2 gas well will be followed immediately after that. During December and January weather window, we safely installed the Concall and completed the installation of single-point mooring system. Post dry dock at Singapore, our floating storage and offloading vessel Frame Price was mobilized to location, and it is now connected to the SPM. As of now, all offshore facilities which are weather dependent have been installed and fully integrated. Consequent to the shut-in hole pressure of the new wells drilled being much higher than the wells drilled by ONGC, we had to replace few equipment for safe operating reasons. These had a longer lead time, and mobilizing service engineers from abroad also proved to be more challenging in this pandemic environment. Wave 3 infected quite a few of our employees too. We have crossed all the hurdles now and expect the pre-commissioning works to go smoothly. Due to these uncertainties, until now, we were unable to keep you updated with a realistic schedule. I apologize for that. Overall, executing B80 project in Western Offshore in this pandemic environment has been a major challenge both personally and professionally. We firmly believe the B80 resource base will transform HOEC, sustaining its growth on a long-term basis and making all the struggles worthy of its purpose. Response to our B80 gas e-auction has been very encouraging. All major consumers and aggregators have expressed their interest to participate. Taking advantage of the prevailing market conditions, we opted for a Brent-linked pricing. Bidders are required to quote a premium as a percentage of Brent over and above 12% of Brent. Assuming someone quotes 1% premium, and if the Brent price for the relevant month was $60 per barrel, then gas price will be 13% of 60, that is $7.8 per MMBTU. We have kept a floor price of $6 per MMBTU. Auction will be concluded and gas sales contract will be awarded by end of this month. As advised earlier, we will initially store the oil produced from BAT to carry out assay of settled crude and discover the best market prices to sell the oil from the delivery point at FSO. At DIROC, we pursued a strategy of value over volume to realize a better gas price. As a result of successful e-auction, instead of Oil India being the sole buyer, we now supply gas to 4 other consumers. Foam gas is now sold at a premium rate to Numaligarh Refinery. In addition to this, Brahmaputra Cracker and Polymers Limited, BCPL, and Northeastern Electric Power Company, NEPCO, have started drawing gas recently at premium rates on a fallback basis. Overall, in Q3, premium sales constitute about 20% of the total gas sales. Premium realized is more than $1 per MMBTU. The balance volume continues to be sold to Oil India at government notified prices, which are now close to $3 per MMBTU. We continue to have uninterrupted operation at DIROC with Q3 average at 33 million standard cubic feet per day. We had planned shutdown for maintenance during December that brought the average slightly lower. Our direct contracts with various consumers have enabled us to extract the best possible value without the need for additional capital investment. Status quo continues in PY1, where the only way to increase production is to drill additional wells. The next drilling campaign in PY1 will be planned after commercial production from BAT. As indicated earlier, final investment decision will be taken after independent technical assessment and de-risking. In our Cambay assets under approved FDP, we will be drilling development wells in Asjol and North Balol. Towards this, we had initiated the environmental clearance process and a public hearing was held in January. Much delayed R2 PSC amendment in our college block has now received the approval of ONGC board and awaiting final clearance at MOPNG. Over the next 2 years, drilling campaign at Cambay will be planned for all 3 blocks together to optimize the cost and resources. I now invite Jiva to share the financials. Thanks, Rango. We report that the company made a revenue of 38.19 crores in the current quarter against 37.23 crores in the previous quarter. In the consolidated accounts, it is 46.63 crores against 45.13 crores in the previous quarter. Increase in revenue is mainly from increase in sale price of gas and higher realization for condensate due to increase in oil prices. The profit on standalone is 17.61 crores against 17.42 crores in the previous quarter. There is an aberration because other income of 6.18 crores in the previous quarter compared to the normal level of 2 crores in the current quarter. The total expenses of standalone, including the DDA, is 20.58 crores, comparing 19.83 crores in the previous quarter. Operating costs are not linear, however, the statutory levies, royalty and cess are at the level. In the consolidated accounts, it is 28 crores, comparing 27 crores in the previous quarter, including the adjustment of stock. Operating cash flow standalone for the 9 months before the working capital change is 58 crores and the consolidated account is 63 crores. During the quarter, the loan of rupees 125 crores of Axis Finance Limited, a non-banking finance, was taken over by Axis Bank directly. Average finance cost is in the order of 8% with a cross-currency swap. We have the support of 2 Indian banks, Axis and HDFC, to support the growth of the business. With the borrowing, the company is levered about 33% on the book value of assets. With the market cap, it is about 15% as on date. With the expected cash flow from BIT, we will be able to liquidate the debt at a faster mode than the tenure agreed with the bank. we would like to be debt-free again. With the cash in hand, we have duly installed the single-point mooring system, and the entire production system is fully integrated. FSO was duly moved with SBM and ready to receive the first oil from KGP. As on date, only 30% of the investment in oil and gas assets in the revenue mode, and the 70% is still in capital work in progress. Investment in BAT for 60% of our share and 100% for the offshore installation, that is the KGP, and the FSO and SBM is about 763 crores. Mobile offshore processing unit, that is we call it as an offshore installation, and the floating storage offshore and single point mooring system have been acquired and operated through our subsidiary. These wholly owned subsidiaries will be on a revenue mode from the date of commencement of production that will improve the group revenue substantially. On commencement of BAT production, sales revenue from oil and gas, charter charges from BAT Ventures for FSO and MOPU would commence. We submit that better numbers could be reported on the commencement of production from BAT, which will make a new beginning, and our focus thereafter would be on the other dormant assets in the company in Western region as well as in PY1. Thanks, Alango. Thank you, Jiva. Anuj, can we open the forum for questions now?
Thank you. Ladies and gentlemen, we will now begin with the question and answer session. Anyone wishing to ask a question may please press star and 1 on your touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Ravi Sundaram from Sundaram Mutual Fund. Please go ahead.
Hey, good morning, team. Let me clarify. I represent a family investment, and I'm not part of Sundaram Mutual Funds. Okay. So, good morning, sir. I've been joining your con calls for last several quarters. I have a few questions. The first question is, as an investor, I was totally in the dark for the last at least 2-3 months about what is happening with BAT, and mainly because we were expecting a window of almost towards end of November or mid of December for BAT to commence, and we had no clue to understand how the progress was, and any communication from you would have really helped at least to clear the air and what is happening here. But anyway, let me come to my question. So do you see any risks in the current timeline of March that we are looking at?
Okay, thank you, Sundaram. In the last quarterly call, we had explained that we would be mobilizing the offshore spread, and subject to whether we would hope to complete all the installation during December, January. And at that time, we had anticipated by the commissioning work would be over in about a month's time. So we had basically indicated end of January as the date of our target date for commencement, subject to weather conditions, in our last call. Right. So, unfortunately, 2 things had happened during the period. One is the offshore work, which is the most critical weather-related work. Until it is fully completed, there was uncertainty about the timing as such. So once we complete it, then when we come back to the communication, we need to tell the investors and the market about when do we expect to commission the production, because that is the most important information people will be interested to know. Unfortunately, until now, we had no clarity on that, because there were some equipment which needed to be replaced. There was issues on the delivery time related to that. It was very difficult to get the service engineers from abroad to come under this wave 3, and some of us were also down with COVID. So all that kind of led to a bit of a non-communication. The non-communication was not really intentional. We thought it is better we come with a clear communication at the end of a quarterly call rather than giving another day which we are unable to meet. That's the context. And and to answer your question, right now all the weather-related risks have been mitigated fully. All weather-related installations have been completed. We are much more certain about completing the remaining pre-commissioning and commissioning activities. So we are more confident now that we should be able to complete everything by end of March and commence the production. That is going to be our endeavors. We don't, at this stage, we don't see any risk to that schedule.
Understood. Sir, next question is, I noticed that we are having an e-auction tender from V80 for 0.3 MMS. Pardon me for the metric, I don't pronounce it well. So why only a small quantity there, and why not a bigger volume?
Yeah, as you know, we had guided production was 15 million cubic feet per day. Out of that, after internal consumption, we expected to sell about 12 million cubic feet per day. The market understands the million cubic meters. So 12 million cubic feet is roughly about 0.3 million cubic meters. So we went in for that. And we've also kept the option to place some volumes on the exchange if at all there is any excess volume depending on the once the production stabilizes. So 0.3 is roughly equivalent to 12 million cubic feet per day.
Okay. That's almost the full production after excluding the internal consumption. Okay.
Correct.
Okay. Sir, my last question I'll give, maybe I'll come back in the queue. So if production commences in March 2022, when will the revenues actually hit the P&L? Is there going to be a lag between extracting, storing and then actually selling it?
Yeah. See, gas as such, the billing cycle goes on 30 days. So suppose we get the gas revenue on the 15th of April or so, because that would be on a 30-day production. But oil, we will be storing it for a minimum period of about 2 months. Because with the 2 months volume, then we will make an offtake somewhere around the end of May, and the first revenue realization would be in the third week of June. That's what we expect.
Okay. So Q1 is when you're seeing the revenue hitting from B80 into your P&L, right?
That's it. Yeah.
Okay. Sir, you've been doing a lot of hard work in this. I've been following it for several years. Best wishes. Thank you.
Thank you.
Thank you. Ladies and gentlemen, in order to ensure that the management is able to address questions from all participants in this conference, we request you to limit your questions to 2 per participant only. The next question is from the line of Hridesh Gandhi from Discovery Capital. Please go ahead.
Hi, sir. Just wanted to sort of again reiterate the question the earlier participant asked. Look, we've had many slippages in terms of our deadline with regards to the P80. This is not the first one. This is the third or fourth one. Just wanted to understand: is there, in your view, any risk, and what actually has gone wrong, and what other level of precaution we could have taken to ensure that these delays don't happen, and how are we going to ensure that there isn't any other slippage now? Because this is, at least the third or fourth time this has happened.
Yes, Hridesh, we embarked on this project with a very ambitious schedule, and we made to achieve the schedule. We could have completed during the last season, but for cyclone. But for that, we had everything else in place. Now, this is something we cannot control. And post that, I think it may be difficult in market to understand. In our business, when we do an offshore project, It is like snake and ladder game. You go up the range, once you're bitten by a snake, you're back to square one. You have to mobilize everything else within the limited resources that we have to do that. And we are now, I don't know, I'm sure you all will have your own take on this, but as professionals, we are very relieved that we have achieved the most important milestone in the project, which is weather-related one, and completed that without any major safety issues or any major any major incidents also. So we are relieved from that point of view. Now,
but are there any other snakes? Is there any risk of some other snakes as we reach closer and closer to the 100 on the snakes and ladder board?
Look, in this business, I mean, if somebody is investing in oil and gas, one should be prepared for all kinds of risks. I'm saying, as far as the execution comes, there are no weather-related risks. Our best estimate is we should be able to complete the remaining activities, which is all confined to changing equipment and testing equipment. And we are on that basis, we are giving you an indication that we should be able to commence. But at this stage, I don't see any risk.
Okay, understood. And the other question is, if you could also keep updated, any update on the amount of the reserves which we have there, and any indication on if it is in line, ahead of estimates, under estimates with regards to how much we've got in terms of oil and gas?
No, there is no further update on that. We would focus on getting the production and stabilizing the production and stabilizing the operation. And with the oil and gas prices looking good, overall it should all look good. So that's.
But I mean, I'm sure there would be some amount of estimates with regards to the reserves and some amount of the information out there, which if you could share would help us sort of just understand where we are.
After obtaining some production history. Yeah, what is given has been given. Any update, we will update definitely once we have a.
Okay, thank you, sir. I'll rejoin the queue.
Thank you.
Thank you. The next question is on the line of Abhishek Nigam from B&K Securities. Please go ahead.
Yeah, hi. Thanks. Thank you so much. So just a couple of questions. So one, if you can tell us, production numbers on entitlement basis after BAT starts. So for HOEC as a whole. So, that will be very helpful.
So, as far as, in BAT, we have a 60% stake now. Both oil, we expect the oil production to be around 5,000 barrels of oil, and gas is about 12 million cubic feet per day. 60% of that together would be equivalent to, total production will be about 7,000 barrels of oil equivalent as far as the BAT is concerned. So currently we are doing roughly about similar volume from our other gross assets. So total will, with the commencement of production, our total gross production will double to about 15,000 barrels of oil equivalent. That's a gross. Our overall share would be about close to, it will double from, more than double to about 5,000 barrels of oil equivalent. Net to HOEC.
Okay, so this will be 5,000. Okay. So this is BOEPD, barrels of oil equivalent.
Yeah, correct.
Okay. And FY24 should more or less be similar, or can I expect some increase, decrease, something?
FY24. We're talking about 24 actually. So 24 we plan to drill a well there. So with that we'll be able to, because as I told you earlier also in the previous call, we wanted to make a revenue stability rather than the production stability. So production volume is linked to the price as such which will be there. If the oil price maintained at the same level, we will be continuing to the same production level, though we will on well more there onto the field.
Okay, got it. So more or less same 5,000 odd in both the years, probably, assuming prices remain steady. Okay, and second question is, if I look at on a per barrel basis for HOEC, if you could give us some sense of where will the depreciation cost and production expenses per barrel and cess will be. That's my last question.
See, normally what we are looking at, whenever there is a price as such, because the revenue to the government is linked to the price.
Yes.
And now that is roughly around, you can take roughly around 30 to 33% that goes to the government, both the royalty and the government share. Then the balance operating cost is about, say, roughly around $15 per barrel. So assume your oil price is $80 and $30 goes to the government and $20 goes to the operating cost. Assume maximum, I'm putting the numbers. $30 would be your net back.
Okay. And the cess arrangement, is 30% odd broadly. Okay, because I think right now,
look at the revenue profile as such. If I'm talking about 4,000 barrel on and average, so my top line would be around say $90 million. So it's about 675 crores. And the government share that is on the revenue sharing model, and the royalty put together would be around say roughly 230 to 240 crores. The balance would be on 440 crores, and your operating cost would be 140 crores, and your net cash would be 300 crores, and your depletion would be roughly in the order of say 10%, that is around 65 crores. So your P&L would be around 235 crores. Now in our case, one of the best advantages that whatever is the operating cost, the entire operating cost, out of that about 75 to 80% comes back to the group revenue, because the FSO and FU is owned by us. The floating storage offshore and the SPM is owned by us. So one side in the book adjustment at the block level we'll be charging to the block, and out of that the entire amount will come back to the group through its subsidiaries as a revenue to us. So that will make its own revenue to the extent of 125 crores. So we will be taking a net cash in the order of say 400 crores plus, and the P&L impact would be about say 125 crores. The net by the profit after tax at the Concall level would be minimum of 300 crores. This is what our projection there on. At the current price, normally if oil price is $95, we'll reduce $10, that is $85, we'll take it as a base. And gas price minimum, we take it as a $6 as a base.
Okay. That's very helpful. Okay.
Thank you.
Perfect. Thank you so much. That's my last question for now. I'll come back in the queue. Thank you.
Thank you. The next question is on the line of Varatharajan Sivakrishnan from Antique Limited. Please go ahead.
Thank you. Am I audible, sir?
Yes, please.
So, look, what, has there been an increase in the debt in the current quarter, or would you be able to give the number? And how much of interest has been capitalized?
Increase in debt in this quarter. Yeah, there is no increase in the debt in this quarter. Our total borrowings about we have indicated it is 375 crores, and that's all the numbers which we borrowed and for completing the BAT as a whole. We have no intention to borrow anymore.
He was capitalizing the interest.
The capitalizing the interest was about some 20 crores, 26 crores.
Okay. And in terms of production, given the fact that right now oil prices are at a high, so are we sticking to the 5,000 barrels a day, or will you look to cut it back a little bit?
We wanted to keep the revenue as a constant number. Accordingly, we will be keeping some oil below the ground. We don't want to bring oil up and pay to the government the maximum revenue share. But you should understand the revenue share starting from 12%, it goes up to 55%. Right? So we wanted to bring it to a level of say around 21 to 22%. We go up to a maximum of 22%. So accordingly, we'll adjust the volume of the production as such. And gas as such, we have a good market there. So we will not be flaring any gas. Associated gas go along with that.
Great. I'll join back with you. Thank you.
Thank you. We'll move on to the next question. That is on the line of Rohit Poti from Marshmallow Capital. Please go ahead.
Thank you for the opportunity. And thank you for the detailed commentary in the beginning, as always. I hope the COVID-related issues are over at the company and all are well, and there is not been any major issue at the employee level. So my first question is on the asset, the rental assets that we are having for BAT. Is the rental linked to oil price in any way? In the sense that at higher oil prices, does it result in a higher rental, or is it broadly stable across the production period of the asset?
Yeah. See, the two major assets in any oil and gas, the two important is the offshore installation, that is a floating production unit and floating storage unit. These both are owned by us. Now, normally what happens, if the oil price goes down also, we get the same revenue. If the oil price goes up also, we get the same revenue. They should be roughly earning an IRR in the order of around, say, 30%. And accordingly, once the price fixed will be stable for the 7 years. It
Understood.
will not be linked to the oil price and gas price.
Sure. And sir, the second question is, what is the total asset block that will be generating rent? So I remember you mentioning a number of 763 crore in the opening remarks as the asset base. So will the entire 763 crore asset base be producing the rental revenue? And second, I mean, that number seems higher as compared to the number that you mentioned, I think 1 or 2 years back in the conference call, that we'll be spending around 400 odd crore is what I remember the last time number. So if you could reconcile these, that would be helpful.
I can tell you that. See, the total investment is on the BAT field assets. You remember that we have a 50% stake. 50% stake initially, that we subsequently increased to 60%, right?
Mm-hmm. Yes.
So the total block cost as of the moment is for well, facilities, and everything put together is in the order of, say, excluding the capitalizing interest, is 600 crores. So HOEC share would be in the order of, say, 400 crores for 60% thereon. That is then that 400 crores, you continue to earn 60% of the field revenue thereon. Then the facilities, like offshore installation, that is KGP, we spend about 155 crores, and the FSO and SDM about 200 crores. Total, there is about 350 crores. This 350 crores would be 100% owned by us. That would be on a 100% revenue mode. 100% revenue will accrue to HOEC's group. So in effect, out of 763 crores, because 400 crores for field cost, and the facilities like MOPU and SDM and others owned by us is about 353 crores. Total about, in the books we have 763 crores, which would be on the revenue mode once the production starts.
Perfect. This was very, very clear and helpful. And sir, last question. So in the previous question, you gave a breakup of the revenue and cost for the field once it's on full revenue mode. I just wanted to confirm that the numbers that you shared was what will accrue to HOEC. So the field 60% and the. I just want to confirm.
60% of the field revenue comes to us. 40% goes to the partner. But the floating production unit, that is MOPU, and FSO comes to us 100%. So in that, we will be making net cash about 125 crores per annum.
Okay. And the 300 crores that you mentioned towards the end is the net profit, and it's not the net cash to the company. The net cash to the company should be higher, ideally, right?
It's about 425 crores.
Okay. Thank you, sir. That's all from my side. I'll get back in the queue.
Thank you, sir.
Thank you.
Thank you. The next question is on the line of Sunil Jain from Nirmal Bang. Please go ahead.
Yeah, thank you for taking my question, sir. Sir, my question relates to more of the auction pricing, which you had put up a proposal for BAT. You had given one example at $60. If suppose the gas price, if the Brent prices come down to say $40, then what could be the price of gas at 1% premium, or what could be the price at $80 also?
Yeah. Sunilji, what we have done is to protect from any downside scenario. We have kept a floor price of $6 per MMBTU. So, irrespective of the oil price, the minimum price that we will get is $6. The rest is depending on what the people quote. But people will have to quote over and above 12% of the Brent. 12% we have kept it as a base price when they decide to quote. And they'll have to quote a premium, whatever they think is that they can afford. So we have a protection at the floor level of $6, and then the rest depends on who quotes the highest price. We've also put a condition that we wanted a single customer to take the entire volume because we would be using the ONGC facility to deliver the volume. So this would be, so that also we have put as a condition. But overall response has been quite good from almost all the major players have shown interest to participate. So that's, I hope that clarifies.
Yeah, but what is the current price, sir, in Surat area or whatever the exit point?
So right now, in Gujarat, you have different, ONGC, for example, sells at $2.9 per MMBTU, common notified prices. Private customer, different people are selling, if it is under the long-term contract, $5, $6, $7, depending on volume and where the field is located is being sold. And of course, the imported LNG prices are at a much more premium, and spot LNG prices are much, much higher as well. So after talking to the market players, the players preferred a Brent linkage to the pricing, and which we have. That's why we came up with this model of straight away easy linkage to Brent with a floor price to protect any downside scenario.
Okay. So you are confident of this process going through, means at $6 plus
yes.
We can get. And
yes,
second question related to DROC. DROC, the gas which we had sold through auction is at around 20%. So what was the average realization for DROC, and how much maximum auction base we can sell in a total percentage?
Yeah. Yes, one second. So with the premium about some 20%, we are getting an average price of $3.35 per MMBTU. But this will increase substantially once the volume of the premium goes up. Currently, it is only 18 to 20%, and we are expecting it will double in the coming quarters. So we will be able to realize a price which is somewhere closer to 3.7 or 3.8.
Okay. So initially we were targeting that.
Sorry to interrupt, Mr. Jain.
Yeah,
okay. Request that you return to the question queue.
Okay. Okay.
Thank you. Ladies and gentlemen, in order to ensure that the management is able to address questions from all participants in this conference, we request you to limit your questions to 2 per participant only. The next question is from the line of Ankit Kumar from Alpha Capital. Please go ahead.
Hello, sir. Thank you for taking my questions, and most of my big questions related to BAT have been answered. So I just wanted to check what about our life after BAT, as in what are the fields to be developed, and how do we expect our net production to grow post BAT completes?
Yeah, Ankit, just give us one more quarter time. That we've all, the last 2 years, more than 2 years, in fact, all of us have been fully had to put all our efforts and focus on BAT, and we face multiple challenges, which we've kind of overcome them. We just wanted to get BAT fully stabilized with a good oil prices and much better than expected gas prices. Just wanted to ensure we stabilize everything, as Jiva pointed out in his opening remarks, that we want to get back to a Dead Sea status and stabilize all our operations and focus on some of the existing assets. As I have said in the past, we have within our existing portfolio the ability to double our production post BAT over the next 2 to 3 year time frame. So we wanted to take up, but that will require strengthening the organization as well. We will do all that and come up with a clear business plan after getting the BAT on production mode.
Sure, sir. Nothing else from me. Thank you.
Thank you.
Thank you. The next question is on the line of Subrato Sarkar from Mount Intra. Please go ahead. Subrato Sarkar, your line is in the talk mode. Please go ahead. As there's no response from the current participant, we'll move on to the next. That is on the line of Pankaj Tanna from Varun Investments. Please go ahead.
Good morning, sir. I just wondered, on page 6 of your presentation, you mentioned gross production as for Q3 is 7684 and net production is 2364. So could you just share light on what is this?
Yeah, the gross production of 7,600 barrels of oil equivalent is basically what we produce from all our fields together, which includes the share of the JV partners also. Net production reflects what ultimately gets to our top line and bottom line, which is the HOEC entitlement out of these productions.
Okay, that's one. And this Dirok plant shutdown is over, and how many days was that shut down for?
It was about a week. About a week.
About a week, okay. And this 0.33 MMSCMD that you've put up for auction, can we multiply that by 6 to arrive at a daily figure, or no?
Yeah. You can multiply by 6 as a thumb rule. Yeah.
Okay. And besides this gas, what is the likely oil outflow that you plan to store and sell every 2 months? What would be the flow of oil is the question I'm asking.
Oil, Now, oil production is expected to be 5,000 barrels of oil per day, right? And,
okay.
As you was explaining, depending on the prices, there'll be a little bit of variation. But that is the daily production. But we have the capacity to store 6 months of production in the vessel. But we will be selling, once we do the initial sale, and we'll selling the crude oil through saleable parcels to the refineries.
Okay, so you plan to store it on...
Mr. Tanna, sir, may we request that you return to the question queue? There are participants waiting for their turn.
Okay.
Thank you. We'll move on to the next question. That is on the line of Nirbhay Mahawar from N Square Capital. Please go ahead.
Yeah, congratulations for the good progress in BAT in such challenging circumstances. Just wanted to understand, for the oil sales, we'll have to get into some kind of arrangement or agreement with the OMCs, and how much time would it take?
Yeah, Vibhuji, thank you. What we are planning is, typically the refineries look for large volumes of sample of what is called settled crude. The crude that we samples that we have, small volumes that we have which was taken during the well testing, will not be really sufficient to determine the true and proper value, because otherwise the refineries tend to show more water in the crude, and we will unnecessarily get burdened with a discount. So our plan is to, because we have this option of storing the crude, our plan is to initially start the production, allow the crude to settle, then the crude assay can be prepared in about 20 days or so. We already identified the agencies which are acceptable to both refineries and us, and they will prepare the crude assay, which we will share it with the refineries. And we were thinking of conducting an auction, maybe on a similar mode to what we did with what we are doing for gas, by sharing the technical details and crude assay with the interested refineries, and then putting the delivery point as at FSO, and then encouraging people to participate. That's our plan. And we should be able to complete that fairly quickly.
Okay. Sir, on Dirok, with the higher prices, probably because of the shutdown, we have not seen that kind of revenue ramp up. But how do you see the run rate production going forward? What kind of peak production we can get? And I was expecting a much higher profitability because our realizations will virtually double. So, what kind of what is the mismatch here?
Yeah, no, I think in terms of volume, you are right. Because of the more than a week period that we had a shutdown, the average volume has come down. In terms of the offtake, the trend we see is obviously this whole model of premium gas sales is new to the sector. They had participated. Where we have kind of positioned to ensure encourage participation, we kind of positioned Dirok as a peak demand supplier, right? We said, look, you can bid on a firm volume basis as well as on fallback basis, which is when you need more gas, you tell us, we will be able to deliver, but you have to pay a premium. And we put a premium of base price premium of $1. So people have bid for both under a smaller volume under firm basis and more volumes under fallback basis. But everybody knows that when they need more gas, they can go to Dirok. That's how. But we also wanted to ensure that we continue to produce the volume and we don't suffer any reduction in volume due to this change. So we continued our arrangement with Oil India where we supply the balance volume. So Oil India, all the consumers are predominantly Government of India consumers. They are reliable consumers, but they are all government. So the shifting has taken a little more time because we don't have any of our own facility to distribute to individual consumers. We are relying on Oil India facilities to do that. So people also it is like a merit order of a power sector. People would first take the cheap gas available from Oil India, then go to the premium gas from us. But we've got the facilities and we are seeing the 20% share to increase further as we move the quarters as such. So our expectation earlier was on a total basis we should be realizing about $4 for the entire world, $4 per MMBtu. Now we are looking at somewhere between 3.75, around 3.75 to 4. And bear in mind the government notified prices are also set to rise from 1st April. So overall, one can look at a better realization from Dirok. We're very glad that we have moved from relying on a single buyer in Oil India to almost 4 buyers now we are supplying. And I must add that Dirok field performance has been very consistent, very good. So our effort would be to ensure better realization for all the volume before we bring in more volume to the market.
So would we be able to?
Sorry to interrupt, Mr. Mahawar.
Just a follow-up. Yeah.
Yeah. Okay. Let him.
In terms of volumes, would it be fair to expect 40 SCFT from Dirok going forward?
See, we are roughly producing about 1.1 BCF for our share from the Assam. And the last quarter, because of the field shutdown and other reasons of the other shutdown pointed by the purchasers of our gas, we reduced our volume by 25%. Even after 25% reduction in the volume, we could be able to get the same revenue base as such with the increase in prices. And roughly, if you take it around 36 or 35 or 36 MMSCF, which is the standard quantity which we are operating at the moment, that will set to increase. Our field is having the capacity to produce up to 40 at the moment. So we are doing some workover, and with the workover, we may be coming out with a different production profile. depending on the market. The market is able to absorb more volume, then we will be able to push up to more volume. We should be taking us from 35 to 45.
Okay. Thanks a lot, sir, and all the best for the good work.
Thank you. Thank you, Linda.
Thank you. The next question is from the line of Rikesh Parekh from Barclays Securities India Private Limited. Please go ahead.
Yeah. Thanks for the opportunity and congratulations on at least setting up bringing the BAT to the pre-commissioning stage. So my question is relating to this $6 MMBtu, the base price what we have kept for the gas price. Do we see sufficient demand for the full quantity offtake in your view?
Yes, Rikesh. We've quite the response has been very, very good. A lot of people have, serious players have expressed their interest to participate, and we've taken their feedback, and some of them wanted more time for submission. We've extended the bid submission date to by a week or so. So we are very, very pleased with the response, and we are very sure that we'll get to the right customer.
Okay. And by when we'll be able to complete this? Means in next week or so we'll be able to.
No, by end of this month, because it's a fairly simple process. The process involves, we've already got the model gas sales contract as part of the bidding document, and so by end of this month we will conclude the process.
And in terms of this realization, any revenue we need to share with ONGC, because we'll be using the ONGC network for bringing it to the till Hazira.
Yeah, we will be sharing a tariff which is notified by the DGH. Those tariff agreement we are negotiating with ONGC, will be signing that.
So what could be approximate? Means any ballpark number?
I will let you know because we are negotiating it, so we'll let you know.
Okay.
It's not.
Yeah, no problem. Thanks. Secondly, now means probably now we are all set, or means have we able to test any flow meter or something in this pre-commissioning stage by now, based on the this current status as such?
Yes. The whatever equipment that we are able to change, we have already sourced them, and they are at the delivery now. So taking all that into account only, we are guiding the market for start by end of March.
Okay. And my last question means on the PY1, means there was a nominal production. Are we able to do any further production or over there on the PY1?
PY1, I think we will be once the dehydration unit is in place, and we will be able to produce about 1 million cubic feet a day. So we are going to the drawing board again on the block, because that is one of the blocks which will facilitate us, because we can work on the marginal cost basis. So the marginal cost is going to be smaller because the facilities are already in place. Our geologists are seriously working on it. Once they are finalizing the firm plan, then we will be drilling the well, having stabilized our financial position there without further borrowing.
Okay, thanks. So just one last question, if I can.
Sorry to interrupt. Sir, may we request that you return to the question?
Yeah, sure, no problem. Thanks.
Thank you. The next question is from the line of Manan Patel from Erawat Capital. Please go ahead.
Hello, sir. Thank you for the opportunity, and congratulations for going to the pre-commissioning stage. So first, quick question is, you got the public hearing clearances and the Cambay wells. So currently we are producing around 78 barrel oil equivalent, if I'm not wrong. So what is the potential over the next 2 years? As you said, you will drill more wells. So what will be like? Will it move the needle for HOEC, especially after BAT comes in?
Manan, what we really wanted to do was these two blocks are quite very marginal, very, very small volume. We had a little more, we expect a little more potential in the Palej block, for which there's been a lot of delay by the government in amending the PSC, because this is a first of its kind type of amendment where we have sought the surrendered area back. With the support of GSPC, we were able to
get the approvals in the government, but the process has taken much more. So our idea was to, we are expecting now the ONGC board has also approved that. That is to be signed definitely within a month or so. So once that is also done, we thought we will combine all the 3 blocks together and undertake a program. And obviously, the idea is to, it's not a needle mover, to borrow your words, but certainly we just wanted to ensure that instead of playing a very, very marginal player, let's see if we can build and do something more also in that region, because the opportunities for both organic and inorganic opportunities are available. Our effort will be to see whether we can build something meaningful in Gujarat onshore block, where we have a lot of experience.
Understood, sir. Sir, next question is, so sir, especially on the PY1, currently sort of we are in a high price environment for oil and gas both. So I wanted to understand, because PY1 is like fixed sort of realization at 3.65. So why not focus on other fields where we can get much higher realization, which are market linked? And because on the PY1 we have faced so many issues for many years, so why not focus on other fields where we can get market linked realization rather than a fixed realization in PY1?
Now we will take all that into account, but as Jiva was pointing out, the idea is in PY1 where we really feel is that is a block that is we are able to operate at a very, very cost efficient basis. And the investment required is only for drilling the well. Of course, there is what sort of challenges, but it is only to drill the well. The rest of the infrastructure is already available. Trained people are available. So we will take all that into account before taking the final investment decision.
Okay, sir. Thanks a lot. I'll get back in the queue. Thank you.
Thank you. The next question is from the line of Rohit Balakrishnan from iThought PMS. Please go ahead.
Hello, sir, am I audible?
Yes, Rohit.
Yeah, thank you, sir, and many congratulations and all the best for the last leg of BAT. Sir, I had 2-3 questions. So one was in terms of, most of the questions have anyway been answered, but just a couple of follow-ups. So in terms of, we initially had a plan to increase our production in Dirok from 35, 40 MMSCFD to 55 also and beyond. So just wanted to get your views on that. I know that we were in some PILs and regulatory processes there. So just wanted to get an update from you on that. That was my first question.
Yeah. Well, on Dirok, we have an opportunity under which we can drill additional wells and take the production from 35 to 55. The field has got the potential. As Jiva was explaining, what we thought was, in the last 4 years of operating, the operating performance has been very good. The reserve performance has been very good. Our technical team is kind of reassessing the larger potential that we may have in Dirok in terms of individual well production. There are 2 ways you can increase the production. One is by drilling new wells, which is what we are envisaged for under the FDP. The other way is to do some workover in the existing wells to improve the productivity. That study is ongoing. Our effort that is on the one side, which would ensure that we minimize the capital but still be able to increase the productivity from individual wells. We have 6 wells right now producing. 3 are the new wells, 3 are the old wells. That is one part. The second part is, as you see, there is still a huge variation in the pricing within the country. I mean, at Gujarat, you're really looking at a double-digit price, whereas in Dirok, we moved the needle a little bit by increasing the price. And I think from 1st April, the price is going to be much better as well. So our idea was to also ensure that we don't flood the market with too much volume and destroy our pricing. So the whole idea would be to carefully manage it in a manner that you bring the right volume to the market based on an established increased offtake. So our first milestone would be from doing an average of about 35 to touch 40 and then maintain a 40, which is doable within the existing, and then take it further from there based on further technical studies we are doing. Now, having said all that, we are not stopping any of the plans for implementing the FDP. We are proceeding with the forest clearance as well as the environment clearance is already completed. Forest clearance work is already going on. We also wanted to create that pipeline infrastructure to have a more independent access to the customers, which we will do. So our idea, as I said earlier, is to focus more on value than volume in in BROC, and but we do have the flexibility to increase the volume by doing more.
Okay, that's helpful. And so just a couple of more questions. So one was on understanding in terms of taxation. My understanding is that we have tax credits due to previous losses, and we will not have to pay taxes till probably 700-800 crores of PBT. Is that understanding correct, or if you can just clarify there? And second question was on this, on FY21, I see that our production sharing contract, we've got an ad hoc extension, but just wanted to get your sense that, I think that ad hoc extension is only till April of this year. So what is the plan there, if you can just share? So these are the two questions. Thank you.
We have a debt tax adjustment to the extent of about 800 crores. That will sail through us about 2 financial years, that is from the current 2022-23 and 23-24. But by the time within these 2 years, we will be looking for some inorganic or some of the other capital expenditure in such a way we will build the tax pool available to us. So looking at this, instead of paying 30% tax, we will be drilling number of wells more through exploration and other things. So overall, we will be doing an effective tax management in a way that we will be able to take some risky projects after 2 years down the line. So 2 years, we don't find any tax outflow there around 2 financial years.
Right, so just one small clarification. Ma'am, this is a follow-up actually, if you can just let me. So just to be very clear, it's not on a per field basis, right? We can continue to.
Based on the corporate level, we have the tax we can carry it out. And second thing, whatever the field investments we have got 2 method, either charging 100% or taking a percentage out of it on the development, which will be going through that more. So effectively, I'll create some more depreciation available to me for the BAT assets. Then my existing tax carry, both the things can sail through me for 2 years comfortably. By the time of the 3rd year, when we are going for making the tax payment, we would be in a position to put some more aggressive plan for drilling some wells, high-risk exploration wells or something like that, in a way to build up the portfolio of the assets of the company. Because that effectively reduces my 30% of the risk, right?
Got it. And sir, if you can answer on FY1.
Yeah, at the FY1, we have got an ad hoc extension up to April, and we are intending to get the extension. There is a royalty dispute with the government. It has gone to the dispute resolution committee. Now the committee is again to be reconstituted. Based on the outcome of the committee, we will settle the royalty issue with the government, and then we will secure the block for us. We are not willing to lose the block by any means. Whatever be the amount which is required, we will not get into a dispute more. We will settle with the government and secure the block for us.
Right. Thank you, sir. All the very best.
Thank you. The next question is from the line of Vaibhav Badjatya from Honesty and Integrity Investments. Please go ahead.
Yeah, thanks for providing the opportunity. So just have 2 questions. Firstly, on B80, for the remaining activities, do we need any regulatory approvals? And Have you historically faced any problems in those out of the regulatory approvals? That's first question. And secondly, I missed your earlier remark when you said 300 crore is the minimum profit that you expect. So what was the assumption on the oil and gas prices in this estimate? These are just two questions, if you can answer that.
Okay. This is well approval as such. I don't think Langu can explain to you. There is no hurdle we face it to the BAT as such. And normally, whatever the current price, we'll take $10 less than that. So today, if you look at the oil price is $95, we take an $85 as the base price for oil. And the gas price, we have taken $6, but we will be better than $6 in the Western market. And second thing, the production volume which we considered was 4,000 barrels, not 5,000 barrels. And this one gas is about 12 million standard cubic feet per day. Okay, this is on a consideration. All the regulatory, there is no other, because it is an offshore field. We don't deal with any state government. So we have all the approvals required from the central government to proceed. Because they're very supportive. Okay.
Thank you. The next question is from the line of Ashwin Reddy from Samatha Investments. Please go ahead.
Yeah, hi sir, good morning, and thank you for the opportunity. Firstly, on the BAT, I wanted to understand, is there any risk of, say, the volumes being lower than what we expected, or how do you see it in the next once you start? Is there any chance of volume being lower or anything else that you can foresee, or what else, or anything which can go wrong, which
Ashwin, this is the way we come out with after drilling the 2 wells and ONGC drilled 3 wells. Based on the 5 well data, our scientists have come out this can produce this much. This has been later verified by another scientist from UK, Gaffney Client Associates. It is a subsurface, right? So we cannot be so certain like a manufacturing as an input-output ratio therein. But we are fairly confident and we are sure that is a P90 that we will be able to achieve this volume. That is the P90 is a 90% probability of achieving it. Still there is a 10% probability of failure thereon. Even 1% is 1% there, right? So that we should be able to do it.
Got it. And for going to the next level in BAT, what is the amount of CapEx you would need in the next 2 years? What kind of CapEx would be?
What we are planning to drill 2 more wells immediately, and after that we will drill 1 more well. Total about 3 wells as such. So 3 wells we are looking at a capital outflow which is in the order of say $60 to $65 million, including the connecting thereon. And now after the 6 months production, we are planning for a water injection study. And if that study turns out to be very good to us, then we may drill a couple of wells after the 2 years there also. As such, an oil field gets okay, then continuous drilling and continuous development is the basis for it.
All right, sir. And secondly, sir, on FY23, can you provide any update? Because last time around, we understand the current operating partners had wanted to go ahead and you didn't give the permission to go ahead. So right now, what is the status on FY3? What is the status?
I don't know the status. We are being a non-consenting party.
No, but can we still go ahead and, even if you don't approve because they have the majority stake? Is that a possibility in FY3?
So we always have the possibility therein. We always do our project at a cost and at a price thereon, because we can't take an unlimited exposure thereon. That is the reason we become a non-consenting party. At a real cost, we will be willing to be a consenting party at some point in time.
All right, sir. Okay, got it. Thank you so much and good luck.
Thank you. The next question is from the line of Rikesh Parikh from Barclays Securities India Private Limited. Please go ahead. Rikesh, your line is unmuted. Please go ahead. Rikesh Parikh, your line is in the talk mode. Please go ahead.
Yeah, sorry. Thanks for the opportunity again. Sir, just one question I had was that we had planned for expanding our team size as such. Any progress on that? Have you identified the new members to be included in our team?
Yeah, we've taken some more members to manage the BAT operations, and so our focus is on we've got all the team to operate the BAT now. So we'll be enhancing our presence in Mumbai. But overall, for the organization as a whole, we will do that first.
Sure. No, thanks. Thanks for the question.
Thank you. The next question is from the line of Ashok Agarwal, an individual investor. Please go ahead.
I just want to know about this mention of new export pumps being imported and sort of integrated in the facility. Was this not an original requirement, or at what stage this requirement has been sort of arisen?
The original in the original plan, we had planned that the oil also will be connected through a pipeline with the existing ONGC pipeline to a ONGC facility, oil also. But subsequently, the ONGC's facilities arrival got delayed, and we thought depending on the ONGC and synchronizing would delay the project, and ONGC facilities are still not arrived. Therefore, that is one thing that then we needed to. Our idea was initially to, we will be able to modify that same pump to do the pumping to the frame tried FSO. But then that study finally revealed that we had to change out it. We tried to avoid changing out the pump. We did some studies to that effect, but that did not work. So finally, we had to try to change out. That is one. But more importantly, the shut-in pressure. During this period, since we built the well, we've been monitoring the well pressure. We have got the system now, which we can monitor the well pressure. The well pressure has been higher than what was originally we saw in ONGC wells, based on which the whole system was initially designed. So for safety reasons, certain shutdown walls also needed to be changed, which once again, after a detailed study our effort was to avoid changing the equipment and see whether we can at least initially start with the existing equipment. When the safety studies pointed out now it would be unsafe to do that, and we had to go in for new equipment. That took some time to identify. So that's clarified.
So when these new export pumps are installed, do we mean that we will not be pumping through this SBN and that system?
No. We will be pumping with the new pump. We'll be pumping it through the SBM to the FSO system.
Oh, the new pump is needed for pumping to the FSO. Why not through a ONGC pipeline you mentioned just now?
No. Our initial plan was to connect it with the ONGC pipeline.
Yes.
With that changed. So we thought that pump also can do this job. The further studies revealed that cannot be done. So we had to change it, which we are changing.
Okay. So is it that we can think that the delay which has occurred has partly been because of these export pumps? And it's not purely related?
No. This is a very small equipment, right? This is whatever delay that has occurred is purely weather related. But what we did not want to do is parallelly we were not pursuing various activities. We just wanted to ensure the highest risk activity is mitigated first. I mean that's a call we took, that we will focus on ensuring that the major risk activities which are weather related, which are very, very could turn out to be, where there is a lot of safety issues associated, are addressed properly first, which we have done now. Okay.
Okay, fair enough. Yeah. Thank you very much.
Thank you, Ashok.
Thank you. The next question is from the line of Nirbhay Mahawar from N Square Capital. Please go ahead.
Follow up on this PY3, that accumulated tax losses, PY1, sorry. I probably misunderstood it. What is the total accumulated tax losses we have in PY1 and at corporate level?
See that PY1 as such, there are two ways. When you look at an oil and gas company as such, all the assets put together, what is my carry forward loss or depreciation thereon? That is at the corporate level as a whole. That comes around I'll have around some 860 to 900 crores. So that will be using as my carry forward loss adjustment for the subsequent period, right? PY1 per se as such, I've got a substantial cost carry with me, so I don't pay any profit or to the government. That's all the difference.
Okay. But that will be the field specific advantage.
Yeah, that is, see, it's not actually in India, it is not the field-wise taxation doesn't exist. It is a corporate taxation as a whole.
Okay. Thanks.
Thank you. The next question is from the line of Sushil Agarwal, an investor. Please go ahead.
Hello, I am audible?
Yes, Sushil. Yes, please.
Mr. Sushil Agarwal, your line is unmuted. Please go ahead.
Yeah. Okay. Mr. Lango, means the pumps and shutdown valve required for BAT, whether they have arrived in Mumbai and at site?
No, they are on way. I had mentioned in my call also by end of this month we expect those to arrive and taken to the site, and right now the engineering work is going on.
Okay. On the follow-up, I think that if we store this oil in the FSO and then during the monsoon period, whether we'll be able to transfer this oil to the smaller tankers?
Yeah, we have a random mooring system in place, and there should not be any problem for offloading in that. That's why we have got this vessel, Frame Pride, has been offloading when it was doing the Panamukta also, field also. There should not be any problem there.
Okay. Sir, my second question on PY3, I know we are passive partners, but because the prices are high, it may help us in a good revenue. I know we are passive partner, but it would help us in this high oil price scenario.
I think we've kind of answered the question, right?
Right. This oil price as such stable for how long we have to look at, at a card itself. If the field is ready to flow tomorrow, then we are having a different game. The field is to flow on next year, we have a different plan. If we have flown after 2 years, then we have another plan. So we have to wait and watch what is happening there to get back in.
Okay, sir. My last thing, because now the company is expanding, maybe we'll need some more teams so that we can work on 2-3 projects simultaneously.
Yes, Sushil, that is our plan. Post VAT, we will be increasing.
Okay, sir. Last thing, this Kerma and Umatra field, sir. Some updates can be put later.
Later we'll give an update on that. Right now, no, there is no activity. Okay.
Okay.
Right. Thank you.
Thank you, sir. Thank you. Thank you for the good work.
Thank you. Ladies and gentlemen, that was the last question. I now hand the conference over to Mr. Elango from Hindustan Oil Exploration Company Limited for his closing comments.
Yeah. Ladies and gentlemen, you all have been very patient. Trust me when we say this, we also wanted to ensure the BAT is brought in production much earlier than we had originally thought. But certain challenges held us from really achieving that. Some are, in retrospect, we could have done differently. But that's life. That's how we can't undo some of the past. But all I can say is we've not spared any of our efforts within our capabilities and limitations. We've done everything possible. And the entire team has been really waking up and sleeping on BAT for the last 2 years, doing a lot of struggles and sacrifices. And I really thank you all for the patience. And I know we should have been much more forthcoming in updating on the status of the project. The only reason we didn't do is there was absolutely uncertainties, and there's no point in giving detailed status without telling you when the oil and gas will be produced. So we really waited to ensure that we have a firm schedule that is committed by everyone else who is involved in commissioning the plant as such. So, as I said in the beginning, it's been a challenging project, but I'm sure when we bring it on production, every stakeholder who's looking forward to that would feel, and we would also feel all the struggle has been worth its effort. At the macro level, prices of both oil and gas are strong and expected to remain so. So that will greatly support our ability to invest and unlock the potential in our existing portfolio by strengthening the organization further. We will roll out a business plan to drive the next phase of growth post-commercial production from BAT. Thank you for being so patient, and thank you for joining the call today. Thank you so much.
Thank you. Ladies and gentlemen, on behalf of Hindustan Oil Exploration Company Limited, that concludes this conference call. We thank you for joining us, and you may now disconnect your lines. Thank you.